Hello friends. Our today's topic is on mutual funds for 250 rupees. So recently there had been the announcement where SEBI just put out a consultation paper that's basically saying, hey, let's make mutual funds accessible to everyone through micro SIPs of 250 rupees. It's kind of like sachets for investments, just like those 2 rupees shampoo sachets but for your investments. Now, here's where the industry stands today. Mutual funds have come a long way. The AUM, assets under management, has grown from 10 trillion rupees in 2014 to 68 trillion rupees as of November 2024. And the number of unique investors, that's shot up from 1.7 crores in March 2018 to 5.18 crores in November 2024. Pretty incredible growth, right? But here's the thing, this growth isn't spread out evenly. Let's break it down with some city-wise numbers. Mumbai alone holds 27% of India's mutual fund assets, which is about 18 lakh rupees crore. Add Delhi with its 12% share and Bengaluru with 5%, and just these 3 cities make up 44% of all mutual fund assets in India. Now, throw in Pune and Kolkata, and the top 5 cities together account for over 50% of the country's mutual fund AUM. This is exactly why SEBI is pushing for this sachetization idea. Some mutual fund companies already offer small ticket SIPs, but it's not consistent across the board. SEBI wants to change that and make it a standard across all fund houses. The goal, to bring more people, especially those from smaller towns and lower income groups, into the formal investment space. Source: AMFI. Here's where it gets interesting, and Deepak Shenoy explained this really well on Twitter. Running these small SIPs isn't as simple as it sounds. Every time someone invests 250 rupees, there are costs involved, payment gateway fees, RTA processing charges, and all that back-end stuff. It adds up to about 2 rupees per transaction, which is nearly 0.8% of the investment amount. That's actually higher than some direct mutual fund expense ratios. Now, let's talk about the numbers from smaller towns and cities, what the industry calls B30 or beyond 30 cities. As of December 2024, only 19% of mutual fund assets come from these locations. But there's a bright side, B30 assets grew by 41% in the last year. And here's another interesting thing, 86% of investments from B30 areas are in equity schemes, compared to just 55% in the top 30 cities. It's clear that smaller towns and cities have a strong appetite for equity investments. Source: AMFI. SEBI is trying to make this work by getting everyone in the ecosystem to pitch in. They're asking intermediaries to offer discounted rates, and they're even planning to cover some of the costs using the Investor Education Fund. On top of that, they're offering a 500 rupees incentive to distributors who can get new investors to stick with these micro SIPs for at least 2 years. It's definitely an ambitious plan. Will it work? That's what this consultation paper is aiming to figure out. SEBI is taking feedback until February 6, 2025, and it'll be interesting to see how the industry responds. Tidbits. 1. Smartphones have become India's second largest export category, with exports reaching $13.1 billion between April and November of FY25, a 46% jump from $8.9 billion during the same period last year. This growth has significantly narrowed the gap with automotive diesel fuel exports to just $400 million, compared to a $10 billion difference in FY24. Exports have skyrocketed from $1.6 billion in FY19 to $15.6 billion in FY24, marking a tenfold increase in just 6 years. Apple, through its vendors Foxconn, Pegatron, and Wistron, accounted for 2/3 of these exports. 2. Tata Communications is preparing to launch AI Studio, a platform as a service PaaS by March 2025. Built on its AI cloud infrastructure and powered by NVIDIA's Hopper and Blackwell GPUs, the platform will offer AI tools like data management, multimodal search, and machine learning operations. These tools will be available to enterprises, startups, and government projects on a subscription basis. The company is also aiming to grow its presence in the US, targeting $1 billion in revenue by 2026, despite challenges like recent executive orders.